As the U.S. markets are currently closed, BigBear.ai Holdings, trading under the ticker BBAI, finished its last session on Thursday, October 9th, 2025, at a price of $7.49 per share. This represented a notable increase of $0.20 or 2.74% for the day. Now, the common perception, the immediate expectation when you see a stock with AI in its name posting a healthy green day is to lump it in with the broad, frothy excitement surrounding the artificial intelligence space. The narrative suggests it's just another vessel for capital chasing the next big technological wave, a smaller, more volatile cousin to giants like Nvidia stock. But that's where the surface-level story ends, and the more complex reality begins. The forces moving BBAI are far more specific and arguably more entrenched than the generalized hype that buoys the rest of the sector. The real drivers here are not just algorithms and data sets, but federal budgets, defense contracts, and national security priorities, a foundation that many retail traders using the slick interface of the Robinhood app might completely overlook. The prevailing belief is that BigBear.ai is a speculative instrument, a stock you trade, not one you invest in for the long haul. It's often viewed by those doing self-investing as a pure momentum play, sensitive to every headline and whisper about AI advancements. This view isn't entirely without merit. The stock is undeniably volatile. However, this perspective is critically incomplete. It fails to account for the company's deep integration within the U.S. government's operational framework, particularly with the Department of Defense and the intelligence community. Unlike a commercial AI firm that has to fight for every customer in a cutthroat market, BigBear.ai secures large, multi-year contracts that provide a level of revenue visibility that many of its commercial counterparts lack. So while the market expects a story of speculative tech growth, the reality is a narrative more aligned with a specialized defense contractor that happens to use cutting-edge technology. This fundamental misunderstanding is where opportunity and risk truly lie for anyone considering an online investment in the company. Looking at the recent trading activity, the 2.74% jump was not an isolated event. It was accompanied by trading volume that has been consistently above its daily average for the past several weeks. This elevated volume suggests more than just fleeting retail interest. It points toward institutional players taking positions. These are not the casual traders on SoFi Invest, but larger funds whose actions are tracked by professionals using sophisticated tools on the Interactive Brokers platform. Their interest is likely piqued not by broad AI sentiment, but by specific, tangible developments. For instance, the recent chatter around increased defense spending on cyber warfare and predictive analytics directly benefits BigBear.ai's core competencies. The stock's movement is less correlated with the launch of a new consumer AI product and more with the passage of a defense appropriations bill in Congress. This is a crucial distinction. While other tech stocks may react to inflation data or consumer spending reports, BBAI's ticker is often more sensitive to geopolitical tensions and shifts in military strategy. A portfolio manager at a firm like Fidelity Wealth Management would analyze this stock through a defense and aerospace lens first and a tech lens second. The macroeconomic environment adds another layer of complexity. The expectation is that in a high interest rate environment, speculative, non-profitable tech companies would suffer disproportionately. And to be clear, BigBear.ai is still working toward consistent profitability. However, the reality of its business model provides a partial shield. Government contracts are notoriously sticky. Once a provider is integrated into a critical defense or intelligence workflow, the switching costs are immense. Federal spending, especially on national security, tends to be far less cyclical than consumer or enterprise spending. This creates a floor for revenue that is much more resilient in the face of an economic downturn. So while a recession might crush a commercial software company, the demand for BigBear.ai's predictive intelligence tools for military logistics or threat detection could remain robust, or even increase depending on global events. This is a point of stability that the market's broad spec tech label completely misses. Investors managing their own individual brokerage account need to appreciate this unique dynamic. So, what does BigBear.ai actually do? In simple terms, it builds and provides AI-powered decision intelligence solutions. It doesn't create flashy generative AI models for the public. Instead, it creates powerful analytical tools that help large, complex organizations make better decisions faster. Their work is split into two primary segments: cyber and engineering, which focuses on providing high-end solutions for sensitive government clients, and analytics, which leverages their platform to deliver insights from vast, disparate datasets. Their business model is built on securing these long-term, often classified government contracts. Think of them as the digital backbone for critical operations, from forecasting enemy movements to optimizing supply chains for the U.S. Army. This focus on mission-critical government work is their key differentiator. While companies like Tesla stock and Apple stock compete for consumer dollars, BigBear.ai is competing for a piece of the multi-billion-dollar U.S. defense budget. This context is essential for anyone evaluating the company through Fidelity ETFs or Fidelity mutual funds that might have exposure to the aerospace and defense sector. Looking ahead, the future outlook for BBAI is a clear illustration of the expectation versus reality framework. The market expects the stock's future to be tied to the boom and bust cycle of AI sentiment. If sentiment is high, the stock will fly. If it cools, the stock will crash. The reality is that its trajectory will be determined by three key factors. First, its ability to continue winning and expanding its footprint within the Department of Defense. One single major contract, like the one they hold with the U.S. Air Force, can define their revenue for years. Second is their push into the commercial sector. While government work is their bread and butter, they are actively trying to adapt their technology for industries like logistics, energy, and manufacturing. A significant commercial win would dramatically alter the company's growth profile and force a reevaluation from Wall Street. Third, and perhaps most importantly, is their path to profitability. The company has made progress, but consistently generating positive cash flow is the final hurdle to proving its long-term viability and shedding the speculative label. With the U.S. defense budget always being a topic of debate, comment below if you think government spending on AI will increase or decrease over the next 5 years. The risks are just as clear and tied to this same reality. An over-reliance on government contracts means that a shift in political priorities or a major budget cut could have an outsized negative impact. Competitive pressure is also fierce, not just from other specialized firms, but from giant defense contractors like Lockheed Martin and Northrop Grumman, who have their own extensive AI capabilities. Furthermore, as a smaller company, any execution missteps on a major contract could be catastrophic. For those considering the stock through platforms offering investment help, like Schwab Intelligent Portfolios, understanding this concentration risk is paramount. The bull case rests on BigBear.ai successfully leveraging its government credentials to build a robust commercial business, creating a dual-engine growth story. The bear case sees them remaining a niche government player, forever subject to the whims of federal budgets, and unable to achieve the scale necessary for sustained profitability. Many looking at investing sites may see the low share price and AI name and think it's an easy win, but the underlying factors are far more intricate. In summary, the narrative surrounding BigBear.ai is deeply misleading if you only scratch the surface. The expectation is that of a volatile, speculative AI stock driven by market hype. The reality is that it is a specialized government and defense contractor whose fortunes are tied to the much slower, more deliberate, but also more stable world of federal procurement. Its recent stock price movement reflects not just general market enthusiasm, but a growing recognition of its strategic position in national security. The true measure of its future success won't be found in headlines about the next big thing in AI, but in the fine print of congressional budget reports and Department of Defense contract awards. Understanding this distinction is the difference between simply gambling on a ticker symbol and making an informed decision about a company operating at the intersection of technology and national security. Disclaimer: this content is for educational and informational purposes only. It is not financial or investment advice. Please do your own research or consult a licensed financial advisor before making any investment decisions. Comment below and subscribe for more finance updates and market insights.